Welcome back to the Daily Stack. Today, it's September 17th, 2025. The Fed finally cut rates for the first time this year, and the whole market is sitting straight up like a dog that just heard the word walk. The big question now is this the start of the real bull leg or just another tease? This is not financial advice, unless your financial advisor is a raccoon day trading from a stolen iPad in a dumpster behind a Taco Bell. Let's stack it.
Hopped in the game, I was late to the start. Dreams in my ledger, put my faith in the chart. Watched it dip, felt my stomach flip. Red candles dancing, but I ain't gonna trip.
So let's set the stage. The crypto markets were already buzzing before Powell stepped up to the mic. Everyone knew something was coming, and then the charts looked like they were holding their breath. When the announcement dropped, Bitcoin nudged higher about 1%, landing near the $116,000 area. Not a moonshot, but enough of a move to show the market was listening. Think of Bitcoin as the guy at the bar who raises a glass when the music changes, but doesn't hit the dance floor just yet. Ethereum's reaction was more like that friend who says they're excited for the night out, but somehow spends the whole time texting from their corner. It hovered around 4,500, drifted down a little bit, not collapsing, but just moody. XRP slipped as well, almost like it showed up at the wrong venue altogether. And then there's Solana, and the other high beta plays. They're jittery, like kids hyped on energy drinks, but they aren't making moves yet. Altcoins in general, they feel like a crowd at a concert before the headliner comes on. A lot of anticipation, phones in the air, waiting for the first note to drop. Now, what actually happened? The Fed trimmed the federal funds rate by 25 basis points, landing us between 4 and 4.25%. In real-world terms, that's the difference between black coffee and a double shot of espresso. It doesn't look like much until you feel it kick in. It's the first cut of 2025, and the reason is simple. The labor market is showing cracks. Job growth is slowing, unemployment is nudging higher, and the Fed knows if they wait too long, a slowdown can snowball into a full-blown recession boss fight. Inflation is still hanging around, no doubt. It's like that one friend who insists they're heading home, but somehow keeps telling news stories at the door. Powell's not ignoring it, but clearly the bigger worry right now is the economic momentum sputtering out. And this wasn't just a one-and-done gesture. The Fed hinted at more cuts on the horizon, possibly dragging rates into the mid-threes by the end of the year. Powell basically pulled out the playbook and said, "Don't worry, we're not short on ammo." So why should crypto even care? Because cheaper money changes investor psychology. When bonds and cash stops paying solid yields, people start looking for alternatives. Suddenly, Bitcoin, with its volatility and upside, doesn't look like a gamble. It looks like the only table at the casino where everyone's winning. The weaker dollar that usually follows rate cuts also plays right into Bitcoin's narrative as digital gold. People don't pile into hedges when the dollar is flexing. They do it when confidence is cracking. Bitcoin lives on that energy. And then there's DeFi. Rate cuts breathe life into yield hunting. A treasury paying 2% looks boring next to a protocol throwing off double digits. Farmers dust off their wallets, liquidity flows into pools, and suddenly the chains light up again. We've seen this cycle before. Cheap money makes risk appetites grow. But here's where you need to keep your guard up. This cut wasn't exactly a surprise. Traders have been front-running it for weeks. That means some of the moves were already baked into the charts. This is where the danger of the sell the news dip comes in. It's like ordering a pizza, hyping yourself up for the feast, and then when it arrives, it's just garlic knots. Still good, still edible, but not the dopamine hit you dreamed up. And the Fed itself isn't operating in a vacuum. Politics are creeping in. The administration tried to oust government Lisa Cook, and the courts basically said, "Nope, you can't unplug a Fed governor like a faulty Xbox." Meanwhile, new appointee Stephen Moran wanted a 50 basis point cut right out the gate. Powell said, "Dip your toes," and Moran went for the cannonball. That tension shows how much pressure is building inside the Fed. For markets, that means less predictability, and in crypto, where volatility is already amplified, unpredictable Fed policy is like throwing gasoline on the bonfire. If the same political forces that are leaning on rate policy decide to lean harder on crypto regulation, the swings get even sharper. We've seen what happens when regulators breathe the word ban or oversight. Twitter melts down. charts go vertical, and suddenly everyone's looking for scapegoats. In other news, the on-chain picture paints a cautious but constructive setup. Bitcoin dominance is inching higher, suggesting alts are sitting on the bench. Funding rates are balanced, no signs of over-leverage yet, which means there's dry powder waiting to be deployed. And ETFs? They're getting steady, modest inflows. Institutions are not stampeding, but they're nibbling. And nibbling from whales still adds up. They're playing the accumulation long game. The table is being set. The poker night early on, chips stacking, players watching. The Fed cut just shuffled the deck. No one's all in yet, but definitely everyone's getting itchy. The key thing to watch out for going forward is guidance. The cut is the headline, but the fine print is what moves the markets. Powell's pressers, the Fed's dot plot projections, those are the cheat codes. Think of it like a concert. Sure, everyone's cheering when the band plays the big hit early, but what keeps the crowd buzzing is the encore. If Powell signals for a slow pace of cuts, brace yourself for chop. If he hints at stepping on the gas, risk assets will sprint. Stocks, bonds, cryptos, even some meme coins. They'll all feel it. So here we are. The pivot has officially begun. The rates are heading down. Liquidity is back on the menu, and crypto's lined up on the runway. Bitcoin gave us a nod. Ethereum's played coy. Alts are checking their mirrors, and the macro backdrop has been reset. The spark hasn't been lit yet, but when it hits, the move will come fast. Maybe it starts with Bitcoin breaking out, maybe it's Ethereum pulling volume back. Maybe it's ETF flows flipping from steady trickle to raging torrent. However it begins, the next leg of this cycle is now locked into place by policy. Only ever click the official hardware link in the episode description. Skip Discord promos, Twitter DMs, or meme giveaway hypes. Your keys remain sacred. So stack smart, stack daily, and I'll see you DGens tomorrow.
Night after night, staring at the screen, wallet full of hope, pocket still lean. FOMO hit hard, but I played it slow.